Why do you need a mortgage approval rather than just a pre-qualification before you head out to an open house? We're going to talk about that right now. Hey everyone, if you're a first-time home buyer, a pre-qualification is not a true approval. That is the initial step of the loan home process, where you're just going to discuss your financial situation with the loan officer. Nothing is verified. So being pre-approved first can also help you find out about any potential issues before you go under contract with your dream home. It's better to deal with this during pre-approval than when you've already found a home. The pre-approval is where you as the buyer provides the lender with all of the necessary documentation. They're going to want to walk you through the entire approval process. The lender will verify your employment, your pay stubs, and W-2s, typically 2 years. They're going to look at your tax returns, and that's typically 2 years, especially if you are self-employed or you earn commission or bonuses throughout the year. They're going to look at your bank, your retirement, and your investment account statements as well. And those are typically from 2 to 12 months, depending on the loan that you're applying for. They're going to also look at financial statements, especially if you are self-employed. They're going to look at letters of explanation for credit blemishes. They're going to look at divorce decrees, if you pay or you receive spousal or child support as well. Often one document might trigger a request for others, so just be aware. For instance, a bank statement showing 15 bounce checks in a single month, that might cause an underwriter to question your financial management skills. It's best to resolve these glitches before home shopping. Trust me, you're going to want to do this. So once you are completely verified, the lender will be able to tell you what you are approved for. So this is good news. They're going to tell you which loan product is the best option for you, and they're going to give you a better idea of the interest rate and what your monthly payment will be. Please make sure you ask them to calculate the taxes, the mortgage insurances, the home insurances, and do not forget about the utilities and home maintenance fees. You really want to have an idea of how much it's going to cost you. You want to give yourself enough cushion before you purchase a home. You do not want to be house poor and not be able to afford food and buy other things. Also, you cannot submit an offer without a pre-approval. If you are not able to get a pre-approved mortgage, a good lender will be able to provide information on what you need to work on in order to get a pre-approved in the future. The pre-approval offer from a lender usually lasts between 90 to 120 days, in which should be enough time to find a home, but I don't know about in this market. So you really need to be conscientious of the expiration date. And if you need to extend it, that's absolutely fine. Your lender will just do a hard inquiry on your credit report. Please be aware of the expiration date. I can't tell you how important that is. And also, you do not have to go with the lender from which you receive your pre-approval from. You can get your pre-approval from any reputable lender. Usually the small lenders are the best. Once you get your offer accepted on a house, you may switch. Shop your mortgage lenders, see which one is the best for you. But right now, you want to work with a lender that can get you the best rate and can get you to the closing table on time. And right now, those are the small lenders as opposed to the big banks. There are thousands of stories that you might hear about home buyers who were approved for a mortgage only to find out later that they were not approved for the actual commitment. And there are many reasons why a mortgage is denied after being approved from the beginning. And some of those are opening up a credit card to buy furniture, changing jobs, paying off credit cards, not having enough money to cover the cost of getting the mortgage. So it's very, very important that if you're going to make any financial changes, to please talk to your lender and they will guide you accordingly. Don't make any rash decisions. That's what they are there for. I don't want you falling into the trap, so please don't sabotage your credit for this. I'm Christina Alexiou, Bergen County Realtor with BXP Realty. Hit the like button and subscribe to my channel for more Bergen County real estate and lifestyle content. If you have any questions about this video or any other real estate related questions, please reach out to me. I'm happy to help at any time.